without further ado, then I'll hand off to Shirley and I'll invite her to share more about the approach that was taken to conduct this research.
Thanks, Ashley. So I just noticed before the webinar started that the presentation that is in the deck is actually not the latest version that I have. So I'm just going to share my screen if that's okay.
Yes, please.
Great. Okay, so I'm going to share mine and we can go with the latest version. Thanks. Okay, I presume that people can see my screen now.
Yes, we can. Thanks.
Oh, I can't put this on presenter mode there. Oh, there we go. Okay, well, thanks very much, Ashley, for the introduction. So just very briefly, Ashley mentioned that we are a sister organization to EFINA at FinMark Trust. And very similarly to EFINA, our mandate is to make financial markets work for the poor by promoting financial inclusion and regional financial integration. And we also do this through research to identify what the constraints are that are preventing financial markets from reaching those who are excluded. And then I actually am part of a unit within FinMark Trust, which is the Insight to Impact facility. It's a global resource center that was set up in partnership with Senfree, and we're funded by the Bill and Melinda Gates Foundation and the MasterCard Foundation. And we've really had a mandate to innovate around the use of and the quality of data that's used for effective decision making in developing financial inclusion. And then even more specifically within FinMark, within the Insight to Impact facility at FinMark Trust, I'm part of the data team, and what we have been really focusing on is good use of data. So we've worked in areas such as GIS, but my main focus has actually been on sustainable data collection. And so the work that we're doing now on the COVID-19 tracker that we're doing really has been made possible by the work that I've done around sustainable data collection and what we've learned. So I'm going to just talk you through a little bit about the method that we've used and why we can use this data to make decisions, even though the data isn't collected in a way that we are typically used to working with. So the sustainable data collection work that we've done over the last few years has really focused on using mixed methodologies of data collection. So typically for development research, we have used face-to-face surveys in the past, but face-to-face surveys are very, very expensive. And so to make data collection more sustainable, we've really been looking at ways of including technology to make it more affordable. And mobile phones obviously are a really good opportunity because so many people now have access to a mobile phone. So we've really worked using SMS surveys and telephonic surveys with interviewers, and then using face-to-face surveys to make up for the gap. So there are obviously people who don't have a mobile phone, and so to get to those people, we've still been using face-to-face surveys. But obviously now that there's the challenge of COVID-19 where social distancing needs to be followed, it's not sensible and it's not ethical to be sending people out into the field to go into people's homes and move from home to home to do surveys. So we can't really use face-to-face at the moment to make up for those gaps in the sample that we can reach. And then because we can't do that, for the COVID-19 tracker, we've opted to use telephonic surveys with interviewers because while they're a little bit more expensive than SMS surveys, they don't require respondents to be fully literate to be able to participate, whereas a SMS survey would require the respondent to be able to read and respond to the SMS. So telephonic surveys allow us to reach a wider audience than if we went with SMS alone. So for this particular work, we've used interviewers in call centers, or most of them are actually in their homes and are phoning using a call center software that they can use from their homes. And they are calling people and interviewing them. And just to demonstrate why telephonic interviewing is fairly good and can actually be used for something that's going to become quite representative. The work that we've done in the past 2 years has been across 8 countries, and it's been really focusing on trying to reach people who are at the bottom of the pyramid, but using technology. So you'll see on this slide, this is just showing how many people in our samples we get that actually qualify as living under $2.50 per day. So what's defined by the World Bank as the poverty line. And what's called CATI there is the telephonic interviews, and you can see that we do actually reach quite a lot of people who are living under the poverty line. And then looking quite specifically at Nigeria, this demonstrates why CATI is better than SMS, because SMS does also reach people who are under the poverty line, but using CATI for this particular work is better than SMS. You can really see in that low literacy bar there that I've shown on the screen how much better the CATI sample is at actually reaching people with low literacy, and in addition also rural people. So it's a fairly good approach to reaching people far and wide. But of course, people who have mobile phones are skewed to certain types of people. So they're more likely to be urban, they're more likely to be men, they're more likely to have a higher education. So we've been very deliberate in how we designed our sample. The sample is not designed using probability sampling. It's actually designed using specific quotas. And the way that the reason we've done that is so that we can be sure that we are reaching enough people in rural areas and enough people who have lower levels of education. Our very first wave of data collection, which is actually going to be what will be spoken about today, unfortunately, we didn't yet have that education quota on, and so we did skew to a higher educated audience. It has been weighted to account for that, but the weights are working a bit harder than we'd like. But going forward for the next 4 waves, there is a quota on education, and our sample, we haven't yet got the weights complete on the second wave in Nigeria, but it's quite close to being ready, and the sample is looking like it has a better representation in wave 2, so the weights won't work quite as hard as they were in the first round of surveys. So just as a quick outline of where we are with the study, we've completed wave 1, and the data is what will be shown to you today. And then we have also completed our data collection of wave 2, and we expect that it will be released on the 21st of May on our portal. And then we are planning to go into field again next week for wave 3. And then there are still two more waves following that of data collection planned, and that's in Nigeria specifically. And then we are doing this data collection in several other markets, and Kenya, South Africa, and Rwanda on a very similar schedule to Nigeria, but Uganda, Zambia, and Ghana are about a month behind this schedule. So if you're interested in any of those markets, those are also available. And the data, if you are interested in it, is available on our website that's on your screen now. So, and that's me rushing through that because there's so much interesting information to get through today. So I'm going to stop sharing and hand back to the EFINA team.
Great, thank you very much, Shirley. We really appreciate it. So now, as you mentioned, we'll dive right into sharing the data. So I'll turn over to Tomi, who's going to share key insights from the Nigeria portion of this survey.
Hello, everyone. Thank you, Ashley. Thank you, everyone, for joining the call. And thanks also to Shirley for setting up the context around methodology. I am Tomira Mosele, like Ashley said. I will be presenting the key findings from the COVID-19 impact on livelihoods tracker with a focus on Nigeria. So just a brief background on the COVID situation in Nigeria. Our first case was recorded in Lagos late February. We had the complete lockdowns for Lagos, Ogun, and Abuja about a month after that. While one could adopt, preventive measures to mitigate the health impact, it became kind of evident that the economic impact and the threat to livelihoods amidst the lockdowns could be, more severe. So at EFINA, looking at the data set that we had from the 8/12/2018, we could see that about a quarter of adult Nigerians earn below 15,000 naira per month. Approximately 15 million, or half of the adult population, earn their income daily or weekly. And about 4.5 million of that, this 50 million people or adults actually resided in Lagos State, where, one of the very first states where, the lockdowns, was affected. So we became really concerned and then eager to, to jump on the FSD impact research. Just to mention, on my way to the office this morning, I was listening to the radio and a young man was saying, we have all been traumatized by the lockdown. And that really resonated with me because it really just, drove the point that we have really been, affected by this, because normally everyone thinks Nigerians are strong, they're resilient, but to hear that, I think it really would kind of show us the importance of these numbers that we will be, looking through today. Okay, at EFINA, we look at this from a financial inclusion lens, basically asking the question, what can financial services do to, mitigate the threat to livelihoods? We've said that the impact could be through health, can also be through the income, the threat to income or the income shocks. We want to see what role can financial services do, to make this, to mitigate this impact on the livelihoods. In a narrow sense, we work with the theory of change that says financial inclusion, which is defined as access to useful and affordable financial services, is able to empower individuals with the tools that they need to manage their finances or build the financial safety nets they need to protect their livelihoods in moments like this. So in addition to tracking the impact on health, income, food security, personal safety, we also want to know, how will this affect access to finance? Will people be left without any kind of safety nets? Well, probably not really provided by government, but personal safety nets like savings, like insurance. And also, how well is the financial sector or financial services, available to Nigerians? How well is that able to meet the current needs that Nigerians face? And we'll also touch on affordability. So access, use, affordability, three key things that we want to see how use as measures to assess how well financial services, is helping to ameliorate the shocks or the threats that Nigerians face at this time. Okay, let's begin with the impact on health. So obviously, beyond the direct impact of, COVID-19 on those who have been infected or, the relatives of those who have been infected, there is an indirect effect that has been reported across the globe on supply chains. Governments, we've seen governments stocking up masks, personal protective equipment, ventilators, just trying to ration out how they manage medical supplies to ensure that it's available to their citizens. But obviously this has created some kind of disruption. And we see that 14% of adult Nigerians currently report an inability to access medicine in the week prior to April 8th. So one of this is based on disruption, which is the unavailability of the medicines, but another one is also the impact on income, which is the fact that they just lack the funds to actually access financial service or access the medicine. Okay, just to also mention that even though 15% of the adults, we see that 15% of the adult population consider COVID-19 to be a punishment from God, and there needs to be a lot of messaging around that to point people towards, the need to seek medical care. So medical care here not being going to the hospital, but probably just, calling one of the numbers that we've seen, because we see about 44% of adult Nigerians who say they're not going to seek medical care, even if they have symptoms related, symptoms of cough or fever. So we are kind of also saying a lot of messaging needs to go out there, on that end. The next thing we will look at is the impact on income. So when we look at the impact on entrepreneur-headed households, and we're doing this because we've, I said earlier on that 50 million Nigerians earn their income either daily or weekly, and we are pretty sure the majority of these people are micro-entrepreneurs. We have about over 44 million micro-enterprises or entrepreneurs in Nigeria, and they are, we have a sense that these are the guys who are likely to be more impacted. They are part of this 50 million people. When we look at the impact on their income, 50% report decrease in income compared to the same time last year. So we've asked them in the midst of the lockdown in the week of April 8th to say how does your income compare to this same time last year? And, half of them have reported that income is way less than it was last year. Now, while this, others have said we're going into a recession, while this recession and these hard times will probably, or has been brought upon us by COVID-19, the fact that economic cycles will always, be there. There will always be recessions, there will always be booms, it's therefore imperative on us as a nation, as people, as a sector, to build adequate measures to ensure that our economy, our institutions, our businesses, and our people are able to cope during crisis. This is COVID, it could be something else next time. So we need to build those safety nets and those measures. Okay, the third impact pathway, which we mentioned earlier, is on food security. We see from the data that about 64% of farmers report difficulty in selling crops or livestock. Now this, caused by disruptions in agricultural supply chains as well. This signifies a threat to food security with the possibility of further hikes in food prices. With already declining incomes, the outcome is probably not going to be a good one. So with disruptions in supply chains, not only will available food not get to the market, farmers may also not, have enough capital for the next planting season if they cannot sell profitably this season. So we need to, as financial system and financial service providers, we need to think about what can we do to kind of support supply chains, kind of support, the agricultural sector to help increase, access to food. Just to also mention that at least one, also nearly half of Nigerian adults report at least one day in the week when the survey was conducted where at least one household member had to go without food. So we're seeing not just threats to agricultural supply chains, we're actually seeing direct impact on food consumption. Okay, now on the access to financial services, remember our theory of change is that, finance and people need access to savings, credit, payments, insurance, and pensions to help them increase their ability to take advantage of opportunities or, to build resilience against income shocks. So we believe that the role of finance in improving livelihoods is particularly important during this crisis. Even though financial services has been, declared by the government as an essential service, we still see serious disruptions in access to financial services. The picture on the left side of the screen are images from ATM locations on the day, the complete lockdown was lifted, and, these are people going to queue for cash. So, and this is because, for about 4 weeks during the complete lockdown, they've not been able to access cash, or, so, and these are probably business owners. So we need to ponder about what this means for their livelihoods. Just to the numbers, we see 11% of Nigerian adults report difficulty remitting through their preferred bank or financial service agent. Also, 1 in 5 Nigerian adults say their preferred bank or agent was closed or had run out of cash. So we advocate for agent banking or, financial service agents as an alternative to brick and mortar. But we're also seeing that this is also affecting the agents themselves, not just the bank. So we need to address the entire distribution network for the financial service sector, and also look at how is this impacting on livelihoods of Nigerians. So we've talked about financial inclusion being access to and use of affordable financial services. So we want to see how are people using financial services at this time. Majority of Nigerians who borrow completely rely on family and friends. So borrowing is probably one of the ways to get the funds needed to as some kind of buffer or help prevent any shocks on income. And we're seeing that this has always been the case. Our Access to Finance survey over time has reported that Nigerians rely on family and friends, and that is still the case. Informal financial service providers also playing a major role there. But as you look at the numbers, one thing we'll see is that we do not really see the formal financial sector playing any particularly important role in terms of, being able to, intermediate funds, to Nigerians at this time. So we're seeing some kind of increase in the use of digital lenders. And also when you look at the NIPS figures, there's been an increase in the use of DFS. So that is good and encouraging, but we need to advocate more for the role of the formal financial sector in, channeling these funds to Nigerians. Probably an important thing to also mention is also some significant use of money lenders, and we want to just kind of point out that, particularly in times like, in times like this, those money lenders' rates could be very exorbitant, and we want, the sector to be aware and, think about how we can address, this challenge. Okay, so we've talked about access and also borrowing. Probably also at times like this, there's also an opportunity for us in the midst of the crisis to rethink our financial inclusion discourse beyond just access and account ownership to, the broader discourse about financial capability and financial health. Basically, kind of asking the question, what can people do with finance? How is it able to meet their needs? And the survey asks a question, just to say how many people can actually raise 45,000 naira, and that's, to meet a sudden need. So we know that we're in an unusual times, they could be, anyone could be diagnosed with COVID tomorrow, they could be, there's been disruption to businesses. So if there's a sudden shock, can you raise 45,000 naira? And we use that just because it's 1/20th of our GNI per capita. We compare it across other countries, and actually only 12% of Nigerian adults, will be able to raise that conveniently without, or who say it's completely possible to do that. Now half of Nigeria, of the adults, say it is not at all, it's completely impossible to raise that kind of money in 7 days. So that tells you, if these people face shocks of this magnitude, how do they cope? And it will be interesting to actually see that. Hopefully the 812 2020 can help us provide some kind of, evidence on that. But also important is the source of these funds. We see that about 80% rely on their savings, loans from employers, increase their working hours. About 25% rely on informal financial service providers and family and friends. Again, just about 1% will look to borrow from formal financial institutions such as banks to raise additional income. So this again points to an increasing need for increasing role for the formal financial sector to step in and provide its perform its role as a financial intermediary. Obviously, there are structural issues around this, and as a sector, we hope that we can work together to address these challenges. Okay, now that we are seeing that all of this disruption is already, creating scarcity and also resulting in increased prices. About 20% of adults report higher prices from their agent location. I will just show this in there that, looking at these numbers, we are aware that in Nigeria we have a target, to be able to achieve 80% financial inclusion at the end of this year. We've been working on that. All of these numbers kind of, poses a threat to that, and I'm sure that as stakeholders in the sector, we are concerned, and this is something that we need to address collectively. Just finally, some country comparison, cross-country comparison across South Africa, Nigeria, and Kenya, where this survey was carried out. The picture, we can see that the impact on income is less bleak for Kenya and South Africa compared to Nigeria. The impact on food consumption is also, kind of less adverse on South Africa and Kenya, where in South Africa we see there's no impact at all on food consumption. We also see the impact of financial service distribution. Kenya and South Africa seems to be very resilient. The financial sector distribution, channels seem to be very resilient, as very few people are experiencing disruptions. I think one lesson to take from this is that beyond, just looking at this from a cross-country point of view, we also expect to see that these kind of differences will exist even within countries. For instance, within regions in Nigeria, we expect that underlying poverty rates or rural-urban spread will also play a role in this, in Nigeria. For example, Nigeria's poor are disproportionately concentrated in northern Nigeria, with the northeast and northwest kind of accounting for over half of people living below the $250 poverty line. So we are already seeing, COVID-19 cases, rapid increase in Kano State and in the north. I think this is just kind of a caution to say that we really cannot afford that in the north, because even the underlying poverty, dynamics in these places will make the impact even more, more harmful. In Lagos, where we have just 1 in 5 adults living below the poverty line, during the lockdowns, we heard people say things like poverty will kill us before coronavirus. We can imagine what the case will be in the north, but like in Kano State, where we have 4 in 5 adults living below the poverty line. So this is, a call again to financial service providers to come together and not just approach this, with a one-size-fits-all, method. So also understand that the dynamics across, Nigeria and various regions will differ, and we need to adopt our approaches or our interventions accordingly. And finally, just trying to get my slide to move now. Okay, finally, just to summarize what we've seen so far, we've seen that Nigerian households are beginning to experience reduced income, lower food consumption, disruptions in financial service distribution channels. But we've also seen learnings from Kenya and South Africa, where the financial sector has been resilient because their digital financial services has been able to help them do that. I think one thing to note is in Nigeria, we have 69% of our adult population own mobile phones, and an additional 16% who have access to mobile phone. That means 85% of our adult population have access to a mobile phone. And we have 86% of adult Nigerians who are just a walking distance away from a potential agent location. I guess the question we should ask at this point is digital financial services the solution? And is that what we should look up to at this point? And how can we leverage this opportunity to increase financial inclusion? The data, I think this slide will be shared, and we could also access the data set. So at this point, I will turn over to Ashley. Thank you very much, everyone.
All right, thank you very much, Tomi. Great presentation. So Tomi, your last slide led in very well to our next discussion point, which is going to be Jacqueline Juma, our head of digital financial services, sort of picking up that conversation about what are the implications for digital financial services and what are opportunities for expanding use of digital financial services to help us in the recovery from this crisis and help us build a more resilient financial system in the longer term. So Jackie, I'll turn over to you now to dive into your content.
Thank you, Ashley. Well, I'll be taking you through the financial inclusion implication following the data that Tomi has just taken us through, and also looking at what opportunities, and especially during this time, how can we leverage digital financial services to improve the situation or to take to our advantage. In order to understand the implication of financial inclusion, I think the first step would be to, first of all, look at the main mechanisms of managing finances amongst households and businesses. So there are four main money management activities. The first being activities involved in trying to gain financial stability through income planning. There's also the activities around spending routines, activities around gaining financial predictability for unplanned expenses, and lastly, that aimed to drive predictability through designated money, which is basically savings. Now, when you delve into the depths of what is happening in these money management activities, you realize that truly the financial management activities are constrained. For instance, the report on 50% respondents reporting that there's a drop in income as compared to same time last year just implies that there's a decrease in the ability to conduct transactions, because this time around they are holding lower, or they have access to lower amounts of funds. There's also the aspect of 52% of the household reporting that at least a household member had skipped meals. Again, that brings out, or it implies that there's household shocks as opposed to how they would have ordinarily run their, afforded their meals at household level. And also, it also just implies the inability to afford to raise money to, for instance, afford food as usual. When you look at the 55% of the respondents reporting or highlighting that they are not able to raise emergency funds. Again, it implies that challenges in savings, or even just challenges in access to money through borrowing, etc. And especially when you connect that with 81% of the respondents saying that they have not been able to borrow recently. So all in all, there's a general feeling when you look at the implication, or when you look at the implication of financial inclusion, there are problems really in trying to access financial services. So, having understood that if we do nothing, these problems will continue to delve, and again, learning from the past experience in the economic shakeups from recession, there's an opportunity to leverage your digital financial services to save the day. So, for instance, we outlined the major things that we could do in the short run to save the situation, because the pandemic presents an opportunity for DFS to thrive. And through these initiatives, we can actually support the financial inclusion track. So for instance, the first one on agent network optimization. First of all, agents are the backbone of digital financial services, considering two things. The first one is that aspect of driving alternative delivery channels for purposes of driving convenience and reducing costs and promoting geographical reach, and at the same time handholding the low-income segments, those who are those who feel intimidated with digital platforms. So the pandemic presents a super downtime affecting agent transactions at the moment. In as much as agents are necessary, other reasons, for instance, restrictions on movement, the social distancing, and the fear that comes with going to engage agents translates into a drop in agent transactions. So how can we use this opportunity to drive agent transactions? Because if you don't do so, we are faced with dormancy and high agent churn. So for instance, there are a number of things that we could do to drive the business case of the agent and hence optimizing the agent network. The first one is, right now there's a lot of palliatives, various schemes involved in distributing palliatives. Could we involve agents in the distribution of these palliatives to beneficiaries? And of course, in so doing so, the agents will be compensated, and at the end of the day, their business case is improved. Secondly, as we talk about the health and safety measures, can the agents be also used to distribute the safety equipment, for example, the PPEs, to those who need it? Okay. Lastly, there's also a means of involving agents in cash disbursements from a number of schemes, especially in the government schemes introduced in an effort to cushion the effects of the pandemic. How can we, therefore, collaborate? For instance, there's a coalition against the COVID movement, if I may call it, that has brought together different stakeholders to cushion the effects of the pandemic. Is there a way that we could work, or the financial services sector could work with the coalition to drive the use of agents in this time, especially when it's their downtime, to improve the transactions and at the end of the day, stay in course with financial inclusion through that reach that is aided by the availability of an ubiquitous network of agents? And then secondly, there's a digitization of the government to person payments, sorry. Also, when you look at what is going on, there are a number of disbursement schemes, quite disjointed to this level, but there's an opportunity to, for instance, involve, digitize these disbursements through various means, either having agents on the ground through which the beneficiaries would receive the funds, or just ensuring that the beneficiaries have wallets or accounts, and then they can have that direct access to the finances being distributed. But the only way we can achieve this, and again, looking into what needs to be done in order to support this opportunity, number one is looking at the problems that exist that sort of hinder the digitization of government-to-person schemes. The first one being the infrastructure. For instance, the BVN kits, the challenges to do with the verification. The BVN kits are mostly used in the enrollment, but there's a challenge in the verification. And you understand that in order to disburse the funds, verification is a very important or critical component. Secondly, the limited infrastructure, especially in the rural areas or the areas where most beneficiaries are. And when I say limited infrastructure, I mean the digital infrastructure is not able to support DFS in that sense. And then thirdly, coordination challenges, because coordination includes that ability to collaborate between government, private sector, and the financial services sector to actually streamline or map out the processes involved from identifying the beneficiaries up until when the beneficiaries receive the cash. Because once the whole processes are digitized, there's a better business case for the financial services players involved, because ultimately the costs will be reduced from end-to-end digitization. When you look at the other opportunity is to do with the expansion of services targeting the rural frontier. Now, there are a number of things that we could think about here, but what is top of mind, again, and what can be done in the short run is we believe that there's an immediate need to go ahead and issue the PSB licenses at this point, because it's been a while. The 6 months that they had, I mean, the nominees, that is the ones who got the approval in principle, had 6 months to prepare, and the 6 months lapsed in March. So we believe this is the time to take advantage of what is happening and issue these operational licenses to expand the pool of players, as it were. And the reason why we feel it is critical is because of two main things. The first one being following the social distancing measures, there's a decrease in the efficacy of branches to operate. And secondly, there's the opportunity to use optimal business models to penetrate the rural areas. And what we mean by the optimal business models are models where we could leverage the mobile wallet, following the penetration of mobile phones in Nigeria. So, for instance, the PSBs that are telco-backed, they have an advantage over typical incumbent or traditional financial service providers, whereby they have the comparative advantage using FMCG metrics in distribution. They're very good at distribution, and particularly if well motivated through the issuance of licenses, they'll also demonstrate better digital infrastructure in the rural areas. Fourthly, there's the aspect of promoting the digital economy. Of late, there's been the emergence of many digital platforms, and some of you, I'm sure, would have used one or so, where there are workers behind the scenes, and they also give rise to the new financial needs. For example, delivery in exchange for payment, and so on. So they too are contributing as regards to creating and bridging barriers to financial inclusion from the payments perspective, because a lot of these platforms involve the delivery, exchange of goods and services, and a lot of payments running through them. Another DFS opportunity lies with product diversification at this point. For instance, the MSMEs. Case in point, there's the 50 billion that is being targeted through NIRSAL MFD to the MSMEs. This is an opportunity to provide digitization to how these entities are going to receive the funds. It's also there's also an opportunity to, drive supply chain financing at this point in time, especially when the MSMEs, as we know them, are not able to access funds and other facilities from typical products and services from the banks. So, for instance, there's an opportunity. Digital financial services provide an opportunity to just have that access to finance by MSMEs who ordinarily would not have collateral or even just a history of transactions. Because again, when you look at the MSME and especially the micros, the business is synonymous to the owner of the business. DFS also provides a means through which these businesses would be able to have access to information on business expansion or operations, easier payments, and just tools to build better looking inventories for the sake of access to credit. So, but as we think about how we can harness the benefits of DFS, there are some fundamental things that we need to take in mind in efforts to drive sustainability in Nigeria. The first one is on building a robust and broad digital infrastructure. And as I mentioned, in the rural areas, there's a lot of challenges. And when we, on one hand, we are speaking about digitizing the G2P payments, for instance, it always comes up. I mean, digital infrastructural challenges always come up as a very big challenge. And so there's need to actually prioritize this for the long run. The other thing under the digital infrastructure is the harmonization of the ID systems. How are we able to make sure that this is harmonized in order to, have a centralized means of access to that data and utilizing that data for additional products, for instance, as regards digital financial services. There's also that aspect of ensuring a dynamic market, and there are a number of things. For instance, opening up the space for competition allows for a broad range of products and services to be introduced. And I'm speaking in terms of, we haven't seen a lot of the push of wallet, in as much as the wallet provides an opportunity to penetrate further and reach out to more people, as well as the, just that aspect of ensuring that the consumer is protected also. Okay, so because, for instance, in the wake of COVID-19, there's a lot of, I'm only seeing a lot of emphasis on riding on digital platforms, but when it comes to consumer protections, of course, there are risks accompanied with the migration to digital platforms. It also presents, the consumer protection is also an area that really needs to be looked into to prevent the risk of fraud amongst other risks. And then lastly, in the long run, and as we look at sustainability, it's important to also consider the products and services, the diversifying products and services that not necessarily change the behavior of customers, because there's a big assumption that it's good to generate a product behind the scenes and take it to market and hope that marketing communications would help in the adoptions of these services. Financial inclusion only means that we provide solutions that work. So it starts with identifying the use cases and building onto these use cases for digital financial services to work. Over to you. Thank you.
All right. Thanks very much, Jackie. So the last thing, we've got about 5 minutes left. We wanted to just leave a few minutes for questions and answers. I don't, if I'm reading the group chat correctly, I don't actually see any questions in the chat. So maybe what we'll do is just open up the space sort of in two ways. So for participants, if you've got a question that you would like to type, please go ahead and now. Or if I can pull up the list, here we go. If you'd like to ask a question via microphone, what I would ask is that you use the raise hand feature. So if you've got a question, and it would just be sort of faster to say it. I think we had, yeah, oh yes, I see it at the bottom. So if you look at your participant list at the bottom, there's a little button for raise hand. And if you raise your hand, you can speak through your microphone. So we'll just pause for a minute to allow anyone with questions to either raise their hand or put them in the chat. Oh, and yes, somebody put a message in the chat about circulating the presentations. Yes, we'll circulate the materials. So following this, the conclusion of the webinar, we'll share a recording as well as the materials on our website, and we'll send it via email. All right, I'm going to just allow one more moment in case anybody has a burning question. Okay, so Simon has a question about the relevance of agents to distribution, and maybe I'll just read that out. And oh, two questions here. And actually, Jackie, I'll invite you to speak to both of these, since you've been working on both of these. So Simon's question is, seeing the relevance of agent distribution at the time, are the likes of SANF and CBN being engaged to help access this opening? And I also saw a question about gig economy as well. So Jackie, maybe I'll let you take the question on the agent networks.
Okay, thank you. There are a number of initiatives that, engagements that are going on behind the scenes to just make sure that we take advantage of the opportunities that to support agents really at this time. At EFINA, we've been engaging the SANF, who account for a good proportion of the agent network in Nigeria, because we understand that there are some agents that are not covered within the SANF umbrella. So there have been discussions even with some stakeholders at CBN on how we can support agents. And yes, so that is ongoing. It's just left to actually implement in the shortest time possible. One area we also feel is would be helpful is we are looking to mobilize the coalition against COVID to think about the agent, because our understanding is that CBN is also part of that coalition. So it would be useful, instead of just using any means to distribute these palliatives and etc. It would be useful to use the agent network, because to just again show that support during this downtime.
Okay, thank you, Jackie. So I see a few more questions are flowing in. We probably can't take all of them, but let's maybe speak to one or two more, and then the other questions we'll respond to via email and circulate to all participants. So Adeyemi had asked a question about 80% roughly of people preferring government support in cash. And I think I can clarify on this one. So this was based on the results of this phone survey that was conducted. one of the questions was, would you prefer to receive government support in food and goods, or in the basically cash equivalent of instead, so receiving money? And the 82% had said that they would prefer the money over receiving food from the government. So it's not to say that they would necessarily prefer, you know, a stack of versus digital money necessarily, but they just said that they prefer receiving money over receiving food. And if I recall correctly, I think that was the strongest in Nigeria compared with the other countries. So I think that there's still an opportunity to disseminate that money via digital services, in addition to distributing cash via agents or other service points. Let me just quickly scan through the rest of the, yes, and I think just to kind of wrap up on the importance of digitizations of cash transfers. So that's something that we're looking at, particularly in the wake of COVID, I think has highlighted the urgency there. And we're engaging with stakeholders to kind of identify the best opportunities to work with partners, including government partners, to help them really effectively digitize those GDP payments. I think we might, because we're at the top of the hour, I think there's some good questions here, but I would propose that we take the rest of them in an offline response, since I suspect that many of the people joining today may have other meetings that they need to join now. So unless there are any other key points from my colleagues that you'd like to address, I will turn over to our program specialist for e-payments, Fola, who will give a few concluding remarks.
Thank you everyone for attending to this webinar. I'm sure we have gained some insight into the impact of COVID-19 on financial lives and livelihoods in Nigeria. So considering the high poverty rate, which you've all seen from the presentations in Nigeria, and with households now experiencing reduction in food consumptions, and I think we agree with me that this is a call for financial services, for us, or financial services stakeholders, to rise up and be better positioned, to help the population and the households manage their finances, thus generating livelihoods. I think that's the most important thing from all we've seen. And a one-size fits-all approach will definitely not work now. And we see that this pandemic has prepared an opportunity for digital financial services to thrive. We can look through the different areas of agent network optimization, productive diversification, among others. So based on some questions that we've seen in this chart now, we'll definitely share the slides all the slides that were presented in today's webinar. And like Ashley said, we'll share some responses to these questions which we have not been able to take. So thank you once again for attending, and enjoy the rest of your day and the weekend. Thank you.
All right, thanks everyone.